Okay, everybody, welcome to Investing with IBD podcast, sponsored this week by Vantage Point. It's Wednesday, July 28th, 2021. I'm your host, Justin Nielsen, and on today's show, we are pleased to announce a new change to the format. We are going to have a reoccurring special guest star. You know him, you love him. It's the former host of Investing with IBD, Irusha Peiris, who is an O'Neill Global Advisors portfolio manager and analyst at William O'Neill and Company. Welcome back to the show, Irusha.
Hey, Justin, it's great to be back. I missed it. It's good to see that you kept the place pretty nice. And
hey, at least I wear a jacket.
You wore a jacket when you were the guest. You know, it's always been your goal to make me look bad, since I like to wear polo shirts.
Well, in a way, though, I think you're going to be bringing a whole new level to the podcast, or a whole new level back. The way that I look at it, as your special guest star status, you are the Heather Locklear of our Melrose Place here, and it's going to be nice because you're going to get paid more. You're going to be bringing in all the drama, and of course, boosting the rating. So that's what you're here for. So make sure you do your job, Irusha.
Well, I can tell you maybe for boosting the ratings, maybe the special thing, definitely not the pay. They're definitely not getting paid more for this, but
okay, so what we're going to cover today, we're of course going to get into the markets. We're going to talk a little bit about using persistence and preparation, especially to handle a choppy market. And then, as always, we are going to get into a few stock ideas that are on Irusha's radar right now, especially with that analyst status. He's doing all these analyzing of stocks. I should also mention that you are a frequent panelist on IBD Live. So for people that just can't get enough of Irusha, which a lot of people can't, that's another place that they can see you regularly. So Irusha, let's go ahead and start with the NASDAQ composite. Last week was really strong. We had that reversal. We just briefly went below the 21-day moving average line and then just snapped right back above it. It certainly seems like buy on the dips is strong with this one.
Yeah, and it seems like every few weeks this market's going to test you, and it's going to test you pretty hard for maybe 4 or 5 hours, and
Right.
It's going to be a brutal 4 or 5 hours. And if you watch the market too closely, like I've watched a few times when these markets have sold off, you may get shaken out of some positions. So it's going to test you, and then it just seems like it snaps back. And Justin, I maybe we're just becoming old fuddy-duddies here, because we talk about these things that were called corrections,
Right.
that apparently
Back
never
in my
happened.
day.
Exactly. Apparently never happen anymore, because we've been doing this for a long time, and whenever we would see the markets get hit so hard and our stocks get hit so hard, we were trained years ago to slowly lighten up, and protect yourself. Defense is the most important thing. But these markets, they almost have those corrections in 4 or 5 hours, and now they've recovered. And so everyone else who's been learning this maybe the last 10 years, they've really been conditioned to, hey, let's buy those dips.
Mhm.
And for the most part, they've been rewarded, while the old fuddy-duddies have sometimes gotten, at least me being the old fuddy-duddy, has sometimes gotten shaken out of some positions.
Well, and I guess whenever anyone says buy on the dips to me, it just makes me think back to when I first started in the late 90s. That was the mantra. All you have to do is buy on the dips. And that worked great up until 2000, where the people that were buying, and again, what everyone was talking about at that time was Cisco and Yahoo, and all you have to do is Microsoft. All you have to do is buy them on the dips and you'll be fine, which worked until it didn't. In 2000, people starting to buy those on the dips were really suffering. Cisco was at $82 or something like that, went down to $1. Microsoft, that did come back to new highs, but it took 15 years for it to do so. But I will say that one of the things more recently, kind of as you mentioned for the newer crowd, the buy on the dips does remind me of a little bit is 2017. And I'm going to go ahead and switch to a weekly chart. And if you recall, in 2017, we had this phenomenal run. And during this time period, the S&P 500, if I remember correctly, never corrected more than 3.4%. for that entire year. So it was just one of those things where it was strangely tough because there was all this rotation underneath the surface. So while the indexes were continuing up, it wasn't always the same stocks that were doing it, or those stocks would have some fairly violent corrections, but then they'd come right back. So you had this kind of choice to decide, am I going to be holding through these corrections because they end up being minor? Am I going to sell into strength? Am I going to sell into weakness and then potentially be selling at the lows and then be scrambling back to get into the positions that I lost? There's a lot of ways to mess it up. So how do you manage to get through this intact and actually making money?
And this is that's the question, and in many ways that's the $1 million question right there,
Right.
Justin.
Multi-million.
Yes, exactly. And I think we all have to answer that for ourselves, because we're all
Right.
going to react to stock movements differently. We're all going to be able to handle the volatility a little differently. What the kind of the conclusion that I have come to multiple times, and then I seem to forget in those kind of moments where I'll panic just for that brief second, and all of a sudden I've sold too much stock, is try to give these stocks, even when they're selling off, till the end of the day at least.
Yeah.
And so what I've been trying to condition myself is, especially these gap downs, when the market is gapping down hard, your stocks are starting to break. And the problem is that, especially if you're studying our system and you're in our stocks, all of our stocks will go down at the same time. It's
Yeah.
amazing. I mean, how tied everything is together. It doesn't matter. A lot of times it doesn't even matter what industry groups they're in. They're all going to come down. And so it's not just one stock that's down 4 or 5%. You could have 5-6 stocks down 4 or 5%, and so your portfolio is getting hit really hard. So what I've been trying to tell myself, especially in that morning when I look, I'm like, oh my God, this is getting worse and worse and worse, is I'm just telling myself that I'm already in trouble at this point. It's like, I might as well try to just give it to the end of the day. I'm already done. Let's try to walk away from the screen and see how it closes. And so we had that type of day yesterday where it wasn't right at the morning, but probably like an hour and a half, I think, into the open, market really started selling off. It's like, whoa, what's going on here? And a lot of times, usually what I'll do is I'll just start watching the screen way too closely, right? And the more you watch the screen, the more you're right at your platform, the more reasons you're going to find to trade and do something. And a lot of
Right.
times it's do something unnecessary. So what I did this time to try to
Do
catch
something just
myself,
for the sake of doing something.
exactly, because you feel like you do,
Yeah.
exactly, you feel
I
like you
have
have
to
to
do
do something.
something. Yeah.
Yeah. But what I try to do this time, because a lot of this is you just almost got going like kind of an automated response where it's almost unconscious, right? You don't even realize sometimes what you're doing. It's like a lot of things, that's why people eat out of control, start snacking, all this
Right.
kind of stuff.
Without thinking about it, autopilot.
Exactly. The autopilot, you get triggered and you go on autopilot and you just start doing those actions to resolve that, that pain or whatever that you're feeling at that time.
And then you
But
jump on your Peloton afterwards.
no, if I did that, if that was the case, I'd probably be 100 pounds lighter, Justin, with all the pain I have what the market has created over the years. But so what I did this time is I try to break that kind of autopilot response, and I went to work. I mean, I left my place and I went to the office, and I said, okay,
Okay.
I'm going to go to the office, go to a completely different
Change of scenery.
change of scenery, kind of get away from those triggers that can get you in that autopilot. And also, I had a number of people, there are a number of people I knew who were at work, at the office, and so I could distract myself by,
Right.
bothering them.
Yeah.
And it helped. It actually helped because I didn't do anything the whole day. I didn't watch the market until the very end, and a number of those stocks actually came back because all the people who were trained to buy the dips apparently started buying the dips again.
Right.
So,
And to that point, though, I mean, I just want to point out, because what we were looking at on last week on the 19th, what was interesting about that is, again, you had that brutal gap down in the morning, and it seemed like midday you started to see some reversals in individual stocks even before the market did. So this is why sometimes just being aware of where the movement is useful, and at least in this case, we at least had a few days down in the NASDAQ. So it wasn't just like what you're referring to yesterday, where it was just one day down and then that's it. We're back. Never
Right.
mind. Mm-hmm.
But it's even that day you highlight, because I fell into the trap there because it was kept getting worse, worse, and then that gap down, it was like I can't take the pain anymore, and I
Right.
sold too many things, and then I had to, I felt like an idiot by the end of the day because I had to go back and buy a number of those things back.
Mhm.
But with
But thank goodness you did, because
yes,
that's something a lot of people refuse to do. They say, well, I can't buy it back now. It's at a higher price. And it's almost like this psychological thing where I'm going to look stupid. No, nobody's looking at you. Nobody's nobody's watching you that closely. So, well, for
well,
you, they
they might
are,
be watching us on
because
the
because you're
podcast.
you're a portfolio manager, so someone's looking at your sheet. But for
Oh,
the
that's
most
true.
part, it's one of those things you don't have to worry about. You just do what's right and what your rules tell you to do.
Now, and which is absolutely true. I think one thing that everyone can do, and I'm keep telling myself this too, is so not only not watch the screens, just don't watch the screens that much, right? Remember, you plan your trade your plan. So when you buy those stocks, before you buy the stocks, you already should know where your exit strategies are, right?
Mhm.
Especially the downside.
Right.
So the best thing you could do is, if you once you get into those stocks, you have those exit strategies, the downside, set some alerts in place, even set some stops, and don't watch it that much, right? And those alerts will let you know
Hmm.
if those stocks are getting in trouble, or when you should start looking at them again.
If you need to stop your distractions and start paying attention.
And I think, yeah, and that almost goes to, what where you will run, there are plenty of people out there who've held Tesla, right, for the last 8-10 years.
Hmm.
They're up absurd amounts, and they rolled through every little wiggle and wobble and all that kind of stuff, simply because they just didn't watch it,
Right.
right? They're looking at it kind of like, I'm holding for the long term and stuff like that, and yes, that can work at time. That can definitely work when you pick the right stocks.
Mhm.
uh, but there is looking at charts is almost a blessing and a curse, because it helps you really time your buys. It helps you manage your risk. But once you learn how to read charts, you have a tendency to watch them too much, right?
And
And
this is
you,
also where the time frames can make a big difference. If you're
yes,
looking at an intraday chart, man, it looks like it's cratering. You step back to a daily, a weekly, or a monthly, and it's just a blip.
exactly. Yeah. So it's time frames, it's put in perspective, and it's also realizing that if the more you watch charts and the more you look for a reason to buy or sell a stock, you're going to find that reason in the chart, because there are infinite ways to get in and out of stocks.
Absolutely. So, any last thoughts on the market? I mean, one of the things that we have been talking about is this hasn't been the broadest market. There still seems to be a lot of stocks out there that are working, that are setting up, but for a long time, it's really been about the $1 trillion club in market cap, the Microsofts, the Googles, that have been really driving the Nasdaq higher, and the S&P 500 to a degree as well, because of their heavy weights due to their market cap. Is that something you see improving a little bit?
I think not only obviously not only the FANG stocks, these $1 trillion company stocks, have been acting well. Uh, I think underneath the surface, even though it's been so far a narrow rally, it seems like a number of the stocks are kind of stocks, are more tech related, growthy type of stocks. They've been setting up over the last few weeks, over the last month or so, and there are a number of bases and a number of stocks that are starting to emerge out of bases. And so the way I look at it is, over the last month, the market has given me more reasons to get more exposure to the market, right? To get more invested in this market, and so that is giving me optimism. So it's been very tricky, but I am optimistic. I'm still optimistic for kind of us getting through August. Well, it could still be choppy at that point, but setting ourselves up for a nice fall rally with our type of traditional growth stocks. So just with a number of the bases and more bases kind of forming, and us getting through earnings season, and we'll talk more about earnings season. I'm getting more optimistic, and I'm trying to do my best not to not to get shaken out
Right.
of some positions that I have right now.
sometimes the summer is just something you get through to hopefully get to the fall, which again, seasonally does tend to be one of the best time periods for our growth style of investing. So we're going to get into a lot more of that, as specifically what we were talking about, some of this persistence and preparation that you need to do. You were talking about having to trade your plan, Arusha. So when we come back from the break, let's get into how you come up with that plan, how you deal with earnings season, and what kind of persistence you need to be successful at this game. So stay tuned. We'll be right back. Do you feel like you're always late to the best trades? You don't have to kick yourself for those missed opportunities any longer. Today is your day. Vantage Point's artificial intelligence has helped traders of all experience levels with its predictive analysis forecasting. Visit www.freestockcoaching.com and find out how their AI automatically recognizes global market patterns well ahead of the news to help you pick the best trade. Go to www.freestockcoaching.com to join a free live training session today. Vantage Point's patented artificial intelligence can give you a massive edge. Don't hesitate, save your seat now. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Welcome back to Investing with IBD, sponsored by Vantage Point. I'm your host, Justin Nielsen, and it's great to have Irusha Peiris back in the house. Irusha, we were talking a little bit about this idea of plan your trade, trade your plan. What kind of things do you do to plan ahead so that you are not reacting emotionally, but more using your rules?
Yeah, this is something that we've spoken about a bunch. If you watch Mark Smith webinars over the years, or even listen to the podcast or IBD Live, the planning the trade, and this was really a breakthrough for me, because I was a customer for plenty of years. I mean, there was once upon a time, Justin, that I would look at Justin Nielsen and say, I want to be like Justin Nielsen one day. When I grow up, I want to be like Justin Nielsen.
Then you got to
But
know me, and
yeah,
you found a different idol.
it's kind of like when you meet when you meet your heroes, they
Never
always
meet
kind
your
of
heroes.
disappoint. But no. So one of the breakthroughs when I was a customer was that a lot of times what I would try to do, and I think a lot of people when starting out, after you go to work, after work, you're like, oh, let me look at stocks. But the reality is, during the weekdays, you're exhausted. You don't want to look at stocks. You want to just watch TV and things like that. But so it was very hard for me to do it consistently, try to stay on top of the market. And I would notice the next day when I get the IBD paper and stuff like that, I was like, oh my God, I missed another break and another break, another breakout. So eventually, and this was a huge kind of breakthrough, and it took years for me to realize this, is, hey, do most of the work on the weekend.
Right.
Come up with a game plan on the weekend, identify where the entry points are, set the alerts on the weekend, and let the alerts tell you when those stocks are ready to move. And this way, during the weekdays, you don't have to do that much. You just have to monitor the stocks, monitor your alerts, and maybe just 10, 15 minutes a day. Just try to get an update on the market. You can watch Stock Market Today or something like that, or read the big picture, and you really are still pretty much on top of the market. So that planning ahead, thinking about what I'm going to do when the markets are not open, right? Because now I'm
When the
thinking more
emotions
objectively.
aren't in there.
Yes, exactly,
Right.
exactly. And eventually, just trying to anticipate. I'm not buying ahead of the time, but trying to anticipate, hey, this could be building the right-hand side of a base. This could break out a few weeks from now. Uh, that really helped me get a little bit ahead of the game. And so when the stocks broke out, once I had that plan in place, I knew exactly what to buy, how many shares to buy, when to buy, and then I just had to put the plan into place.
Yeah, I was the same way. I mean, I remember when I first started out, and again, this was before investors.com was what it is today. So of course, you were looking at the paper a lot of times, and it was stocks on the move, which was called Where the Big Money's Flowing back
That's
then.
right. I
It was the
remember.
bane of my existence, because it was basically, here's a list of everything you missed. These were the things that are moving on heavy volume. These were the things that you should have been in. And
Yeah.
it always made me feel bad. So the next day I'd be like, well, let me buy some of these. And it was invariably I was buying extended, and after a while, as long as you're doing a post analysis and figuring out what your mistakes are, you realize, oh, okay, I wasn't doing my homework. I wasn't looking. I was able to identify the breakouts after the fact, but you need to look for the setups. You need to look for this. You need to look for the stocks that are in the handle, not the ones that have broken out of the handle. So it definitely is a very different mindset. And once you have that, then you're absolutely right. Then it's just a matter of drawing the lines in the sand of, hey, it's either going to cross this point or it's not.
Yeah, and I would say for those who are starting out right now, don't feel like you have to do like 10 hours a day, right?
Yeah.
And I've run across plenty of people who feel like that. And if
Diminishing
that's,
returns after a certain
yeah,
point.
exactly. You're going to burn yourself out. If you do an hour on the weekends and then 10 minutes a day, you're going to stay on top of the market, and you'll probably outlast those who are starting out doing 10 hours a day. Because the reality is you're slowly building a habit to do
Yeah.
work on the weekends,
Mhm.
and you're building the consistency. And as we saw from especially last year, you don't have to be a genius to do well in the markets. You just got to be there at the right time.
Right. And this consistency thing is, I think, something a lot of people miss. One of the things that Scott O'Neill would frequently say about his dad, Bill O'Neill, the founder of Investors Business Daily, is how consistent he was with his routine. Every Saturday morning, the books would
Yeah.
be delivered to his house, and he would be going through charts. And that's just what he did. It was something that Scott could, just remember being at the breakfast table, and you saw that discipline, kind of come out in everything that Bill did. It was just that was his routine. So he was never surprised by something. It was never like, oh, where did this come from? That's not something I was even aware of. It was, oh yeah, I remember looking at that this weekend. So that there was never the surprises, it seems like, because he did that preparation and that consistency. What you find too by being consistent is you're going to be just aware of everything that's kind of moving, and maybe at first there's a learning curve because you're starting off, maybe you don't know all the names, but then you start seeing the same names over and over as week after week their setup continues, and then you get a little bit quicker because, oh, I already know that one. I know the story on that one. Oh yeah, I can move on a little bit quicker because I don't have to do as in-depth research, and then you're kind of, that consistency has built you almost like your own little database for that current market cycle.
Yeah, and your knowledge and expertise within that cycle starts to compound, right? And so it just builds on itself like you were talking about. And eventually, as you start putting it together, then your money starts to compound too.
Right. And there's nothing like a little bit of success to really get you addicted to things. I mean,
Yeah,
I
that's
have to
very
say
true.
that, again, I was a little lucky in the time that I started. It was the late 90s. And that made it so, hey, I immediately had some pretty good success. The problem was I thought that it was always that easy. And so I had some bad habits that I had tested to my own brilliance that were really just the fact that it was late 90s and everything was going up. I guess it's that other part, the humility part, that you eventually learn. If you don't come in with it, the market will make sure you leave with it. It has a way of humbling you. So, have there been any of those times that you've kind of uh, felt like, okay, this has kind of taught me that I still have work to do?
Oh, I feel like almost every week it
Right.
teaches me, right? It's ridiculous. I mean, the market is the ultimate humbling place. I mean, there's that saying that the market's a very expensive way to find out who you are, right? Because it's going to
More
unveil
expensive
you.
than therapy, huh?
So you're going to need a lot of therapy if you
Right.
don't control your losses in the market
Uh-huh.
for sure. But it's going to expose your weaknesses. If you are stubborn, if you think you're right all the time, you're going to ride some of these stocks down big time and not listen to the market, and you're going to take huge losses. And so if you're not preparing enough, if you're not doing the work, you're going to miss out on a lot of great stocks, right? So the market is going to unveil those weaknesses, and it's up to you to kind of realize that you got to learn from your mistakes. You're going to make a lot of mistakes. That's probably I think that's one of the reasons why a lot of really smart people have trouble in the markets, at least trying to do what follow our system, I guess. It is a lot of smart people. They're used to being right all the time, right?
Right.
Because I mean, if you're a mathematician or stuff like that, a lot of it's black and white, right? Hey, you're really
There's
good
a
at
right
it.
answer, there's a wrong answer,
Exactly. But in the
Mhm.
market, there isn't a black and white answer. There's just gray.
Yeah.
And it's
You
just
did all
how,
the work and you think it's the right answer, but statistically, guess what? There was this chance it wasn't.
yeah, I mean, you really could have identified the greatest stock in the greatest market coming out of the greatest base in the greatest industry group and still be wrong in the market, right? Some COVID could hit just like last year, right?
Right. Mhm.
Where something out of the blue could just completely wipe you out that you did not anticipate. So always realizing that the market's right, that you're going to make mistakes, and it's important for you to learn mistakes, will keep you getting better at this. And as like you said before, Justin, it becomes more fun.
Right.
You become more obsessed with it, and it really makes you appreciate all of the new companies that are coming out and changing the world and things like that, because it the world is this country especially is changing all the time, right?
It's hard
Uh,
not to be excited about it.
exactly.
These stories, right? Now, I want to get back to this idea of persistence because we were talking about how great it is when you do have a little bit of success, but sometimes it can be a while before that success comes, and especially for those that maybe started in 2020, as the shutdown happened and people were at home and they're like, hey, I got some time on my hands, I can, learn about investing. Now they've gotten an example of what really has been a pretty choppy market the last few months, and it hasn't been easy. So, can you talk a little bit about what you've learned about persistence and how that's helped, sometimes, get you through tougher periods?
Yeah, the way I look at it, and this gets back to the consistency part,
Hmm.
where if you just hang around long enough, if you survive long enough, and you tread water long enough, you're the markets are eventually going to turn around, and you can make those losses back, and recover from those mistakes, as long as you keep those losses small, of course, right? You don't want to be riding these stocks down and hoping that these companies come back, because some of them might not. But what happens, you really have to get through a couple of cycles, I think, where you have to be persistent enough to get through a couple of cycles where you start to see it and start to build experience on it. Once you have that experience, you can kind of lean on that experience and say, you know
Hmm.
what, I've gone through this before. I've had to pick myself up. And honestly, I mean, there have been, I mean, countless times where I've wanted to quit this.
Hmm.
I just question question
Yeah.
everything, where it's like, why am I doing this? It's
Well,
just
especially like, and I've been here, where it's you look at the S&P 500 and you're like, I did all of this work and I just matched the S&P 500, or
right,
maybe I didn't even match the S&P
right,
500, and you're
right.
like, what was all that work for?
Yeah, yeah. It's well, and you go through these periods where you are wrong. Everything you touch, you're wrong. I remember, gosh, this was like a few months ago. I bought Eli Lilly
Hmm.
at the end of the day, like maybe 5 minutes before it closed. The next day,
Right.
it gapped down like 10%.
Yeah.
It was not an earnings or anything. It was just randomly, just some bad news came out
Yeah.
and gapped down. And that was like, that was a string, after a few other string of stocks
Hmm.
falling apart. But that was kind of just like the last straw. They're like, I'm snake bitten right now. Anything I touch is just blowing up.
Is
So
there an opposite to the Midas touch?
me,
Right. The Arusha touch.
exactly. It's and I but I remembered in 2018 I went through
Yes.
a period like that too, where I had Netflix. I was like, I'm gonna hold Netflix into earnings. It gapped down like 15% or some absurd amount. It's like, how could a Netflix gap down that much? And then I held Facebook. Oh, I'll hold Facebook. It gapped down 10,
Mhm.
15%. It's just like, and it took me like it took me probably a year to recover from that. It just, because the market was choppy, I couldn't get the sync, and I just had to survive long enough for the markets to trend well enough that I could, hack some stocks that were trending well again. And so with those experiences and experiences in the past where I've really got myself into trouble, I've been able to dig myself out of the hole before, and so you can kind of lean on that experience and say, okay, so this time around, when I especially the Eli Lilly, okay, I'm snake bitten right now. Don't trade that much,
Hmm.
right? Or play a lot smaller and let's survive. And so probably those next few months, because of the previous experiences, I didn't lose as much. I was still losing, but I was
Right.
playing with smaller amounts, so my equity curve was going down a little bit slower,
Yeah.
and it wasn't just because that was a pretty tough time, and you can lose a lot of money. It's pretty amazing, even though the S&P is still going up.
And
You
you're
can
good
lose
at
a lot
cutting
of
your
money.
losses. It's
Yeah,
again,
yeah,
you had some gap downs, and again, or what's even worse sometimes is you can kind of get this death by 1,000 cuts.
yes.
Yeah, I cut my losses small, but I had 50 of them in a row, so it didn't matter that I cut them small. So yeah,
And that does bring up a good point there, Justin. Is if you, a lot of times if I'm like 5, 6 in a row
mhm,
wrong, I just have to stop trading for a while.
mhm.
Or just really, okay, I'm just going to try one position and see if I can get that one to work, right? And it's only maybe a 5% position, right? So just to it now, it's not to make the money back, make the losses back. It's, can I get back in sync with the market?
Right. Yeah, you don't want to be doing revenge trades. It's more about, as you said, getting back in sync with the market. But I think there's also that element that you're talking about is you're not giving up. You're still doing something. You're still being engaged. A lot of times, there's a tendency for people to say, "Look, I'm taking my toys and I'm going home. I'm not
Yep.
going to play this game anymore." And then that, unfortunately, is a lot of times right at the bottom or right when things are about to turn. And so here again, it's that persistence sometimes. I mean, you look at some of the greatest traders. I mean, Warren Buffett, Bill O'Neill. I mean, one thing that they had going for them was time, right? They were able to build these fortunes because they just kept at it for so long, and had great returns, but over a long period of time. I mean, that's where the compounding just really works in your favor.
Yeah, and Justin, I remember hearing a story back with some of the portfolio managers like 10 plus years ago, and even longer like that. But it helped me out when I would hear these stories of uh, even Bill, but portfolio managers struggling.
Oh yeah.
Right. And it's like, oh, that at least they're also struggling too. They're human too. They're making mistakes. But why don't you tell why don't you tell a story about one, because you used to be very closely involved
Well, yeah, I would see
with
the
all of that.
sheets. I was, the assistant to Bill O'Neill, and I would see the sheets come in. And I remember in 2007, it was a struggle for most of the year. And in February, you had the Shanghai surprise. Boom, the Hang Seng Index, I think, was down like 7% in one day, and
Wow.
it felt like it came out of nowhere. And then, as soon as you started getting your bearings, few months later, boom, just another, seemingly out of nowhere hit to the Nasdaq Composite. And so again, a lot of the portfolio managers, they were, getting their bearings, they were starting to make progress, and then it would get all taken away. So a lot of them were flat, but then again, they still were keeping at it. I mean, that was their job. And in August, things started to turn, and September and October were so strong. I think the market kind of topped, I want to say mid-November, but just those 2.5 months, I saw some of the portfolio managers go from basically flat to 100% gains. And again, it's not to say that every market is like that, just like every market is not like 2020. That was a phenomenal time, but it just kind of goes to show you that persistence really can help you out, being there at the right time, because that time does eventually come. You just have to kind of wait it out, and then know well enough that, hey, the market is giving me this feedback that now I am in sync. And once it does give you that feedback, then you start going hard, then you start going aggressive. We're going to take a break right now. When we come back, we're going to go into some of the stocks that are on Irusha's radar. So make sure you stay tuned for that. Do you want to conquer market volatility? We can help you protect your hard-earned capital. Visit www.freestockcoaching.com and find out how Vantage Point's AI technology can forecast stock market trends up to 72 hours in advance with incredible accuracy. Vantage Point's patented technology analyzes huge quantities of global data in seconds, so you can finally stop guessing what's going to happen next. Check out www.freestockcoaching.com and experience Vantage Point for free. Learn how successful traders generate their wealth. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Welcome back to Investing with IBD podcast, sponsored by Vantage Point. I'm your host, Justin Nielsen, and I'm joined by my special guest star, the Amanda to my Allison, Irusha Peiris. Thanks.
Justin, I'm going to be the guest that never leaves, though.
Right, exactly how Amanda was on Melrose Place. So we're going to go ahead and get into some stocks, some really good stuff that you shared with us about your kind of whole process, I guess, here, Irusha. But now let's start talking a little bit about where you're at in your process now and what stocks are on your radar. What do you got?
Yeah, so the first one is Unity, ticker symbol U. Unity Software is a stock that I'm keeping an eye on right now. Right, if you're looking at the charts, and for those of you who are obviously listening, you can always go back and watch the video on investors.com/podcast. But here with Unity, it has a lot of work to do. So this is more a company that I just like the story, and I just find it really, really interesting. So it's on what we call kind of a universe list, where it's put stocks that are interesting. They're not ready right now. They're far from forming a base, but let's just put it so you check this list maybe every couple of weeks, so you don't lose track of them. So this is one of those stocks where it came out, it went public last year. It actually broke out of an IPO base and went on a great run. And so I was in it at that point. I was like, oh wow, I this might be one of those stocks that never comes back. But
right,
like a lot of IPOs and most IPOs, they will fall apart eventually and kind of go sideways for a while. So here are some of the things that I like about Unity. So what they are a 3D content creation platform. And so they're focused on games. That's their main thing. And a lot of them are mobile games. So they've created this platform that's used to create mobile games. Now, what was interesting is 70%
so this is for the developers, really.
For the developers, exactly.
Right.
So the developers are using this platform to create games. So 70% of the top 1,000 mobile games are using their platform.
That's a little bit of market share.
It's just a tad, right? And so with this platform, you can build it once and you can deploy it to many different platforms. So you can put it on PlayStation, Xbox, the Mac, the PC, Nintendo Switch. So everything you can put it on. Now, the interesting thing that really stuck out to me, because it's a platform, but obviously there's always competition. But with this, if you're a developer, you really only have two choices. You have Unity's platform or Epic Games platform. So it's a duopoly. So there's only two platforms that you can choose in this market that's growing. Mobile games are growing. And so in many ways, this is a picks and shovels play, right? Where you don't necessarily have to bet on the publisher that's making a Call of Duty or something like that. What's the next great game? You can just bet on the tools that everyone's using. So
whatever the great game is going to be of the future, they're probably going to be using. There's a 70% chance they're going to use Unity software tools.
At least for the mobile games, exactly. Yeah. And so that's what really stuck out to me. Now, augmented reality. A lot of developers are developing programs for augmented reality, are also using Unity's platform, and also they're trying to get this platform more involved in movies, into aerospace, into automotive, because augmented reality is kind of going everywhere. But with the movie space, if you watched the recent versions of Jungle Book and Lion King, some of those scenes were used using Unity's platform to create. A lot of the CGI and whatever. But I mean, like the Jungle Book, I watched that one. It's phenomenal, right? It's all like looks like the real animals talking and stuff like that. It's not the cartoon version, but so it's really well done.
And it's not the old Mr. Ed, chewing on peanut butter.
No, it's not. So those are kind of the things that stick out to me. Is this is a growing market? There's only two choices, and and it's not only just gaming; they have other applications, and so the potential is pretty big, even just outside of gaming. So it's both gaming and outside of gaming. Unity could have more and more demand right now. So those are kind of the things. So I'm keeping an eye on it, but I don't watch it every day.
Okay. And so now, how much does it bother you that this is not something that has earnings yet? It's not profitable. Now, I should say that the revenue growth, which it seems like since 2018, a lot of companies have been rewarded for having strong revenue growth. And this is revenue growth that's not million, it's not this tiny amount of millions. It's, you're talking 200 million per quarter. So it's got double-digit revenue growth, but not profitable yet. Does that bother you?
Yeah, it always bothers me, but this is almost kind of the classic software company, like
Mhm.
you're alluding to there, where it a lot of these companies are really going for market share. They're willing to sacrifice earnings in the short term to try to get as many developers onto their
Right.
platforms, and then slowly increase the prices, right? So
Make it a
yeah,
must-have for the developers, and then they're stuck.
yeah, and
They
they
don't
give
want to learn
other
something
options.
else.
Exactly. I mean, the switching costs are
Yeah.
huge once you get used to. I mean, we've seen that at IBD. Once you start integrating all these platforms and stuff like
Mhm.
that, and you have all your systems running on it, it's very hard to get off it. And you only switch if you really have to.
Right. And I should mention that we actually did put this on Swing Trader. Now we're for Swing Trader, we're going to be doing a short-term play on this. We got earnings coming up in 13 days. You can see that down here, EPS due. Look, this is not the strongest relative strength. We know that, but it did get support here at its 50-day moving average line. The 200-day, I can't think of any stocks that we've ever put on that were below the
That's
200-day,
true.
and that
That's interesting.
200-day just appeared. But again, this was breaking a downtrend. So we decided to do a short-term play on this, give it a shot, and maybe see if it's everything that Arusha has said it's cracked up to be, at least
But
on the
what
short term.
well, what's interesting is if it can get past that 115 level,
Yeah,
right now maybe it can build the right hand side of this really huge type of base right here.
right.
But honestly, this is probably still 3 months away, 6 months away from
Yeah,
really being considered, hey, this is a must-own stock and have a high concentration in the portfolio.
yeah. Okay, so let's go from U to U. YOU, which is an IPO, and this is Clear Secure Inc. What is it that they do?
Yeah, it's really funny, and I think this is a good lesson, I think, for everybody out there. Is you're going to run across some stocks that you just recognize
Right.
in your everyday life.
Mhm.
And so I was just looking at this stock, and I just on the technical side, like, okay, it's a new IPO. It's starting to kind of build the U-shaped base. But then I saw the name of it. I was like, Clear Secure. So every time I would go to LAX, you have these lines that you have to deal with, and I would have TSA pre, so I could go through one special line and skip like kind of the normal line, which is always beautiful.
Keep
But
your
then there
shoes
was
on, keep your belt on.
keep my sheets at, which was really really nice. Uh, but then there was an even more special line. There's like
Right.
a more elite line, and I was like, "What is this?" And so this was like the clear line, the clear secure line, where they're using biometrics and they have machines right there, and you can. I guess they're using their to scan their eyes, right?
Yeah,
The,
yeah.
to
You just
scan.
put your retina up there,
Yeah,
and boom, it's done. So again, what they can do is basically say, hey, we don't need to see your ID. We can see your eye, and we can identify who you are. And I mean that's very clear. So you don't need a person visually checking out that ID. Well, and I'm not sure if you've been to the website, but this
yeah.
also has not just at airports, but there's also sports venues, some stadiums that are using clear technology, and so it's expanding out to more than just airports.
Which is interesting. But I don't know how it's going to be interesting to see how accepted this
Yeah,
is,
right.
right? It may be years, it may be 20, 30 years before something like this is really accepted as biometric stuff, because it really is becoming like Minority Report. It is an interesting idea, right?
Mhm.
Now maybe it's ahead of its time. They have some earnings here, so it's something that I'm not necessarily rushing out to buy right now, but it's one of those stocks that could kind of just go. It's new technology. They're kind of starting maybe even a new category, right? Where all of a sudden there might be a lot of demand. Like I didn't even think about the sporting events, but who knows? Maybe other businesses, like really secure businesses, are gonna use this, and in addition to, I'm sure governments are using it. So these guys could have a really interesting thing here, especially if they have a moat around their business. But the reason why we brought it up is everyday life. Sometimes you'll run across some of these things.
Right.
And so when you see that stock, and then all of a sudden it's a new company, pay attention, because it could at least be profitable. You may be able to make some money on it to pay for that membership.
Yeah, exactly. Good point. So speaking of something you might be running across in your everyday life, I don't know about you, Arusha. I personally am not on Snap, but well, I am only because if I want to communicate with my daughters, this is basically the only way I can do it. They can be in a room with each other communicating through Snap instead of talking to each other. And of course, there's all sorts of. I mean, my 16-year-old, I watch her on it, and she'll respond to 20 people within about 5 seconds, and I don't understand how she does it so quickly. But what is it about Snap that intrigues you, since you don't have daughters that are
Yeah, and I don't even use. I don't know if I've ever used it, but the platform. But
I will take a video of my daughter for you. Just it's incredible.
well, the one reason why I was aware of it, besides that they are our neighbors here in Venice, and they bought up all of Venice a few years ago when they went public. But uh, they can do those. They have that technology to, put, what do they call it, Justin? You're an expert.
Filters.
Filters.
Yeah.
Yes, where they can put all little kind of different types of things on your face, or
Yeah, my daughters have had beards. They put a beard on my 7-year-old. Horns, a halo. You name it. All sorts of things.
Yeah, and so when I saw that years ago, I was like, this is probably a fad, but apparently it's not. But they obviously are making this technology very, very popular, because everyone seems to be using it, and so that is kind of one reason why you kind of kept it on the radar. Now, I haven't done a great job of really profiting off of this company, but Justin pulled up a weekly chart here, really where Snap was set up perfectly was last year in the fall when it formed that cup with handle. So it spent like 3 years, so immediately, kind of like Facebook, right?
Yeah, very much like Facebook.
It blew up immediately,
A
right?
lot of fanfare. Oh my
lot of
gosh, it's
fanfare.
finally coming public. Now's our chance.
And then they kill the stock, right? Because it's too hyped up. They kill the stock. It goes all the way down, I think, to $4 or $5.
And analysts were still kind of scratching their heads. Well, it's great that they have this, all these subscribers, but how are they going to make money?
And that's the name of the
That's
game,
what it was
right?
with Facebook too.
Exactly. So very similar to the Facebook story. So they needed to spend a few years to really prove to the institutions that these guys could make money. But in the September, they formed a cup with handle, which the reason why we look at patterns is it starts to pick up some real consistent institutional accumulation. And that was a really nice constructive cup with handle there. And then they reported earnings. So that within that cup with handle, there were some institutions really betting that they were going to blow out earnings. They were rewarded 6 weeks later when the stock gapped up just in a monster way on earnings. You can when you're looking at these market charts, take a look at the huge weekly volume on Snapchat on December 23rd.
55% change that week.
What was it? A 55%
change that
on
week.
October 23rd, 2020. So that was kind of the game changing. It went in all-time highs there. That's when Snap finally proved to Wall Street that they can make money, and this is an institutional quality stock. After that, it's been doing well. It formed a really kind of choppy base, and I was trying it a little bit in here and there, but I was getting whipped around. But last week, they reported earnings again, excited Wall Street, and it gapped up again. So I tried it on the gap up I bought a little bit there, and I've been slowly.
And that was a 23%, 24% gain on the 23rd of July.
Yeah, and so what this is there's a breakaway gap on earnings, and so it emerged into new highs on huge volume. So it's a powerful breakout, and this is the type of breakouts that I like to buy. Right, you get earnings out of the way. It's a massive breakout coming out of a big trading range. And so here, this is where I'm betting that it's going to work. Now, obviously, if it starts to sell off, and I'm down 8+%, then I'm going to cut my losses and I'll let it set up again. But this is setting up in a way, and it broke out in a way that, and it has this interesting growth type of story that I have to take a shot, and I'll let the market tell me whether I'm right or wrong on this.
Now, the fact that it undercut the low of that gap up, so it's come in and filled in the gap a little bit, but I mean, it's really retained the bulk of those gains. Is there a level where you're like, oh, this isn't working, this needs more time, or it needs to handle out, and you need to step away? What's the line in the sand for you?
Yeah, a lot of times it's a few percent below the low of the gap up day, right? So this one came pretty close.
Just yesterday, everything was getting tested.
Yeah, and so they don't make it easy all the time, right? So it started coming in. I gave it till the end of the day before being forced to do something. Or if it would say close at the low of the day, I would have been forced to lighten up on the position. I wouldn't have closed out of the whole position, but I would have lightened up on it. And given that smaller remaining amount of shares, to see if it can come back. Now today it came back. I bought a little bit back, but I'm still I didn't go in with a big position out of the gap up. So I'm just slowly just buying, adding to the position right now, and we'll see if it works. I think if the market can kind of get its footing and really start an uptrend right here, or at least our growth stocks can really all start to work, Snapchat should be one of the ones that joins the rest of them.
Right. And we did have Facebook earnings after the close today. So I saw it was trading down a little bit in after hours. We'll see how it opens up. Pins has been looking interesting, Pinterest. So again, you're looking at a lot of the group members. Pinterest reports earnings tomorrow after the close. So once this podcast drops, but yeah, it's a good point. Some pretty good lessons there, Irusha. Thank you for sharing your ideas with everyone, and thank you for being on the podcast. It's a pleasure having you back, buddy.
No, it's great. I'm glad you welcomed me back. I mean, maybe you can come in dressed in a little bit more casual manner next time around.
Next time I'll just have my pajamas like I normally show up at work on Zoom, at least when I don't have to use video. Very good. So, well, next week, Irusha's going to be back with me. We're going to be doing this together, and we're also going to be tag teaming with Jim Ropel. Irusha, talk a little bit about Jim Ropel, because you've known him for a long time.
Yeah, Jim is obviously one of the most popular guests on the podcast. And so when he heard that I was coming back to join forces with Justin, he wanted to be the first guest on the podcast. He is a portfolio manager. He has his own hedge fund at Ropel Capital Management. Always has amazing lessons to talk about. And you want to talk about persistence, you want to talk about just hanging around for the big waves. Jim looks for the big waves. He tries to capture these great growth stocks. And in many ways, the things that I always learned from Jim is, try to hold them longer for the big move, right? And longtime client of William O'Neill,
right,
has been personally mentored by Bill O'Neill for many years. So he always has some great stories to share, and we're all going to learn a lot.
Absolutely. So we're looking forward to that. We hope that you join us for that segment next week. That's it for this Investing with IBD podcast. Thanks for joining us. Stay tuned for next week. We'll see you then. And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.